Hey everyone, thank you so much for joining. My name is MK Manoylov. I'm a reporter for The Block. I'm joined with Will Corkin, John Patrick Mullin, and Zhouxun Yin for this panel about NFTs and in-game currencies, regulation, and sort of how we navigate this nebulous space. So thank you all so much for attending. Just a little bit to call out before we begin. Everyone is welcome to ask questions in the questions tab. You should see it at the bottom right of your screen. Questions that you ask here, you can upvote them. Everyone can see them. The more you upvote them, the more pertinent the question asks. The pertinent the question is, it's more likely that I will pick it and ask the panelists here. Otherwise, feel free to use the chat. And yeah, that's pretty much it. We have an hour scheduled, so this is going to be an interesting conversation, I'm sure. So just to get things started, I'm going to introduce the panelists and move forward from there. So Will, why don't we start with you? Who are you? What do you do? And why are we here today?
Perfect. Thanks so much. Glad to be here. So I'm Will Corkin. I'm one of the co-founders of SOMA Finance, as well as MontraDAO. SOMA Finance, which is probably going to be highlighting a lot of the conversation as we kind of go into the regulation and compliance pieces, is the first fully licensed and compliant issuance platform and decentralized exchange in the U.S., utilizing a license that we actually developed with the SEC and FINRA over a 2.5-year process. So looking pretty deeply into the space across anything tokens, NFTs, in-game assets. I'm looking forward to kind of bringing some light into what the regulators are looking at on that side.
Mm-hmm. Yeah, John, how about you now?
I work with Will as well. I'm also one of the co-founders of both of those projects. So looking forward to share more about about everything that he just said.
Yeah, absolutely. And Zhouxun?
Yo, I should go work at SOMA Finance too. Where's my gig?
Definitely hiring.
No, so I'm Zhouxun. It's nice to thanks for having me. I'm one of the founders of Magic Eden. So Magic Eden is one of the largest NFT marketplaces. We're primarily on Solana today. So we do about 95% of all of the NFT trading volume on Solana. We've been around for about 9 months. We've done around just over 2 billion in GMV or trade volume since launching in September last year. Me personally, just super quick background. I was a PM at Coinbase before starting Magic Eden, and before that was the second employee at DYDX. So I spent a bunch of time building in DeFi before getting into NFTs. So yeah, super happy to be here and excited for this chat.
Yes, me as well. Speaking of me, I'm MK Manoylov. I'm a reporter for The Block, and I've been covering NFTs for the past year, and then getting into blockchain gaming sort of as they emerged in latter end of 2021. So yeah, something that I've noticed, just keeping my finger on the pulse of NFTs and now blockchain gaming, is just how quickly the space is moving. So just to begin this conversation, what are the people seeing here that they're excited by in terms of NFTs and blockchain gaming, especially in the last year? Like, what has changed? What is new now?
Anyone want to take this one? Yeah,
I can get started.
Go for
jump in. No, I think from our vantage point, I think we're pretty lucky to have a very, very good vantage point as kind of the main marketplace on a chain where there's a lot of games being developed. So I think we've been noticing a lot of the teams that we talk to are kind of considering the gamut of sort of like performant chains, and increasingly sort of there's probably like Solana, Avalanche, Polygon, and then increasingly the L2s that are coming online. I think one thing that we've been noticing is that it's definitely still very early, right? That's like point number one, and it very much feels like very experimental sandbox. So there's kind of like two themes that I'll mention. One is that a lot of like independent sort of smaller scale developers are very much on the frontier trying to experiment with this kind of like new business model for games. And I think that's sort of how a lot of folks see it who are coming in from traditional gaming. That's number one. Number two is that there's been very heavy capital inflow into games. So we are seeing, a lot of these small teams get funded. Yeah, effectively kind of like hunkering down to build hopefully what will be very, very fun games over the next couple of years. Number three is that, there is a lot of experimentation on the NFT side. So today, I think what we're seeing is, launching some kind of collection or drop in advance of the game launching, right? As a way to like kind of start to engage the community and build a community around the game. And then secondly, it's a lot of these teams figuring out how to go to market in Web3, which is I think a very, very different challenge to how it works in traditional gaming. And what we're excited about is that as a marketplace, we want to enable a lot of those new use cases, because I think most of the NFT traction and innovation thus far has been around PFPs and avatars and things like that, right? Whereas the reality is, when we start to get into this world, the types of assets that will start to come online and the sheer number of them, I think will change pretty dramatically. And that's one of the fundamental reasons that we started our business on Solana in the first place, was because we saw a lot of these developers coming to build here. But yeah, it's our job, I think, to make sure that as a marketplace, we can help both creators, the game developers, launch and go to market using our platform, and also help users discover a lot of these games and a lot of these NFT use cases. So that's sort of my high level sort of point of view on how things have been so far.
I have maybe something a little bit more on the regulation spin. So I think one of the interesting things that we've seen, and I think it's honestly kind of a new kind of term within the NFT space, is like utility NFTs versus security NFTs, which you hadn't heard before. Everyone was just like, hey, this is purely a NFT, which was inherently a utility token type and or property, right? I think increasingly, as you're seeing regulation within DeFi, within stablecoins, within just the broader crypto space, after all these recent debacles, even the one just yesterday, it seems like there's one every week now. It's just a topic of discussion that you can't miss. I think one thing that we've seen at SOMA is that, and actually to Zhouxun's point, you're actually seeing a lot of projects that are thinking in different creative ways on how they can move from just a PFP into something that's like an in-game asset NFT that has a little bit more different type of value. That being said, when you make that move of just being maybe a piece of art and some sort of a profile picture, it does change the characteristics of the actual asset itself and how it could be construed as a kind of a regulated type of asset. So I know we're going to talk about PTE, so I won't go into too much to that point of discussion just yet. But one thing that we've seen from our particular investors, so SOMA's invested by Animoca Brands, Griffin Gaming Partners, and Forte, which are obviously three kind of gaming giants, just to name a few. What they've been really kind of keen about working with us is that they see that a lot of these assets, whether it's on just the actual issuance of them and or even the trading of them down the line, could be construed as a security and or securities trading. And because of that, they're essentially seeing us as a kind of a future proofing of their portfolio of companies, right? So, a lot of these type of in-game assets, depending on how they're going to be trading and transferred, at least within the United States, because obviously the US is its own kind of quagmire of regulations compared to some other jurisdictions. It is interesting to see that these guys are not only bullish on NFTs, but they're also bullish on the proper regulation and kind of DeFi-ish infrastructure around this kind of ecosystem as well. Because again, you want to be able to support these types of founders to launch these types of projects in a proper way, without making sure that they don't get slammed by the SEC or have some sort of illegal securities issuance, because obviously that's exactly what we don't want, and we don't want people getting in trouble for NFT drops.
Right. Will, do you have any comment on that?
Yeah, I guess maybe quickly splitting the gap between the regulation side and a bit more on kind of the NFT and gaming side. Over the last 1 to 2 years, especially as DeFi's really emerged and NFTs kind of came blazing onto the scene, you've seen a lot of the utilities and kind of structure for NFTs adapt from like what John was saying, just kind of a PFP. But having said that, so you had it so even on like Montreal side, you had NFTs that accessed, things like the launch pad, so people to actually be able to invest in new projects. You had, staking of NFTs. You had kind of the more DeFi elements of NFTs, which was, very cool and very innovative in terms of what, was happening on the DeFi side. And now, we're starting to see as kind of the emergence and, a lot more is being focused. And, of course, with Axie Infinity on the play to earn, aspects of it, is starting to see some of these, the use case for NFTs within that space also, which is really cool. So, everyone from the developers, having NFTs that represents the licensing of games. So you're able to, license out games based off of, NFTs. And, I think, and this will kind of, probably come into where we're seeing it in the future, but I think, the emergence of the blending of both the kind of DeFi based NFTs into gaming will be super, super interesting, as you can start bringing, things like NFTs from, in-game assets, but then be able to put them onto like a money market type thing, or be able to stake them and, earn rewards in, other in-game assets. So I think, what we're going to start seeing, and this is utilized and put through based off of NFTs and the technology, will be kind of this emergence of, kind of more in the GameFi, and, DeFi really meets and integrates into the gaming ecosystem. So that's, super cool to really see it starting to come about and move forward.
Yeah, exactly. Yeah, something that I find very interesting just in this conversation and sort of more broadly as we move forward in crypto is to use Zhouxun's phrase of, we're in an experimental sandbox. We're using this technology in very creative ways and ways that haven't been seen before. But sort of as we're playing in the sandbox, there's sort of that teacher of the regulators, watching us and making sure we're not doing anything that could land us in trouble. So I think that lends us into play to earn gaming, which has really exploded in popularity within the last several months from what I've seen. So I do want to focus more on the regulation, but I just want to focus a little bit more on the technology, the play, the sandbox that we find ourselves in. How are people playing with crypto, and what are people earning? Like, how is this technology being augmented in gaming?
Yeah, so I could jump.
That's why that one's straight up your alley.
So there's a bunch of stuff happening, which is interesting. So play to earn in general, for those that may not be familiar, is sort of, you're in the game performing some activity and earning as a result of performing some activity, right? At its most simplest form. And there's now like a range of variations of this model that have become popular. So like one recent one that I think has been trending is like a move to earn sort of wave with a game called Steppen. So this is a Solana-based game. It effectively, imagine, is like a kind of like a Strava or a Fitbit with a kind of a token economy on top of it, right? So as you perform some physical activity, you walk or you run, you have an NFT in the game which is kind of your vessel to earn, and by performing that activity, you're effectively earning some of their native tokens. And it's a really interesting, again, I think it's like still very early, an interesting experiment, because it sort of hits to this a sort of new incentive model, right? That allows users to incentivizes them to perform certain activities, and obviously this can extend to many different things. So the other types of games that we're seeing are like kind of early like browser-based games, which I think are pretty interesting. And these don't really, I'm not sure I fully agree with the statement that like a lot of the broad-based assets in games will necessarily be like regulated, at least like within this sort of body. Because it could be as simple as like, here is a skin, or here is a weapon that you can just use in the game, right? Which is actually very analogous to today, games and traditional games. These are very common elements. In-game items are pretty common sort of common thing that people buy and sell and trade and utilize in the game and flex and all these different things. It could purely just be that, right? So I'd say there's some subset that's like, there is a sort of token economy or financialization of it, which absolutely, like, it'd be really interesting to see where that ends up. And then there's part of this which is purely, in-game items that are usable the pure utility or usable purely as like a visual flex, right? So those are sort of the things that we are seeing. And I think at this point, we are still at the very, I wouldn't even call these necessarily like true games, right? They're not like large scale MMOs. These are very much like experimentations of, it's kind of like just, I'd say like crypto native kind of stuff, right? It's not like, it's not like an Epic Games or something is coming in to build some like AAA rated thing. I think that stuff is still a little while away, and we're pretty excited about those cases coming in the future. But yeah, we're still pretty early on this front.
I guess when you also consider the point that he was mentioning about like in-game assets such as skins and swords and guns and things like this are not necessarily going to be regulated as securities, and I would agree with that. I think the issue is that these types of assets in general would be potentially construed as property, something that you just digitally own, right? But the problem is it property if you're flipping it 100 times a day and trying to profit off of it, right? So when that transfer becomes less of a, hey, I'm just trading my shotgun for an AR-15 or whatever in the game, that's a little bit different. But if you're like, you become the arms dealer within your ecosystem, and then you're like buying and selling, buying and selling, and buying and selling, that may be a little bit of a different story, right? And I think a lot of people are actually in the comments, I mean, just to touch on it, are commenting about how P2E is, it was a good idea, but they want to see people actually use the game rather than just farm and dump the token. I think we need to come up with interesting token economic models that also support, value transfer and value accrual back into these tokens rather than just like farming and dumping, because that works nicely in a bull market, but clearly we're not in a bull market right now. So, these tokens, particularly if they have large supplies, still going to be admitted, are going to have some issues. So I think if, there might actually be a use case for some of these more security type NFT tokens, where if you do, put back, some level of value accrual, whether it's from some sort of royalty of sales or transactions or something like that back into the token, that actually might make it more valuable for a user to hold, not just sell. Obviously that comes with its own level of kind of compliance complications. But I think that's an interesting step because again, not everything needs to be a security. But at least in the United States, you have to be cognizant of how they may be looking at it and making sure that you, again, kind of future-proof whatever your project is doing so that, you're going to not get in trouble. And that's the end of the day. We don't want people getting in trouble.
Well, I think a lot of the games now too are very much so single asset focused. I mean, it's, very much so a proof of concept. We see that there's a market for it, there's an appetite. But of course, there are the downsides, like you both said, in terms of, the immediate next step for people is just going and dumping that token and converting it into, ETH or whatever. I think something interesting will be, once you actually have ecosystems within each of these games. Because again, I mean, the different skins, the different, weapons, the different attachments that you have depending on the game, if you can actually have these, small little ecosystems and small little marketplaces within them, then it actually creates, a bit more of a functioning ecosystem. And of course, then if you have, different deflationary models, it makes it more interesting for people. Whereas, right now, again, it's kind of just on the heels of the proof of concept that, this stuff works. People want to see this. People want to be able to do more with the assets that they earn, in these different games. And, of course, depending on what those assets are, how they're traded, or, how they're used as leverage or, purchased with, then that gets into the, the fun part of, what crosses the line of security and what needs to go into kind of the compliance factors.
Yeah, it's a very interesting point. Sort of as we were speaking, I was thinking, with the issues of play to earn that we see now, it's, how do we make it sustainable? How do we make it fun? And also, how do we make it compliant? With the first two, that kind of comes with, the dev team kind of making that, working with economists, working in ways to sustainably scale their own project. But when it comes to compliance, that relies on US regulators, on other regulating bodies. And I don't know when we're going to get a succinct, full-bodied answer. So when it comes to compliance, what do we do when we don't have this regulation, when we don't have these guidelines?
Well, I think for the time being, the way that we're seeing it is that maybe there's not a guideline for a P2E token issuance under the SEC. clearly that's not in the Securities Act or the Jobs Act or any type of securities regulations to date, right? At least explicitly written. That being said, that doesn't mean that you can at least imply some levels of, the Howey test, for example, or just some general kind of thinking about how this type of asset is going to be functioning within your ecosystem. So when we actually work with clients on a kind of a proprietary token issuance, it actually really comes down to the tokenomics and the use cases for the token. How are you going to use it? And when it comes down to a play to earn token, honestly, one of the things that some of our investors like Animoca were really pushing to us in the beginning the most was that their US founders were like deathly afraid of either launching a play to earn token and or allowing US persons to participate in play to earn games. Because that particularly as an NFT or some sort of token is one of the most clear, like this is something that you're doing for financial benefit and financial reward, right? So we had multiple cases of founders and people who wanted to issue and launch projects that were just like, hey, we don't even want to allow US persons onto our platform. And geofencing them is like the bare minimum we can do. We don't necessarily want to start KYCing everyone, but that's potentially the step that they would have to take if that's the type of asset they're going to be working with. So I think it really comes down to what type of asset are you issuing? How do you see it working within your ecosystem? What form is it taking? What type of utility does it have? And then once you have that kind of idea, then you can start working on almost these creative solutions to work around it. We don't necessarily want to say every single NFT that you're dropping is going to be a security. No, but if you're fundraising for something, you can still have a token that's compliantly fundraised from US persons and US retail people. But that doesn't necessarily like, it's not exactly the NFT. Maybe it's just linked to the NFT in the offering memorandums. So there's ways around it. You just got to be a little bit smart about how you structure it. And obviously we're happy to help if people are confused or have questions. Because that's one of the things that we've been working on honestly a lot is particularly these play to earn games and NFTs. Just because there's a lot of, like you said, there's a lot of unclarity, particularly with projects, because you get all this information. There's not like, hey, I can go read the rule book and this is what it says. So there's still a lot of questions in the air about how exactly this is going to look. But from the just pure NFTs are going to be more regulated in the future. I mean, that is 100% common.
Yeah, I have a couple of general thoughts on this and sort of drawing a bit on my experience building in DeFi as well. Because I think, one general thing I'd say is that like as an early stage startup of any kind, it's always kind of like a risk reward speed trade-off. Right. Yeah.
And cash, money, and how much can you spend?
Yeah. You have all these constraints, right? So you're just trying to basically like, how do I make this stuff work? And I think, in general, you're never going to be, at least in today's environment, 100%, regulatory clarity. It's just not realistic today. And one example is like when I was at DYDX, for example, if we had, if you had basically done the, legal diligence and tried to be 100% compliant, we would never have launched, right? We would never have launched. Absolutely not, right? Not because we were 100% sure it was like bad, but it's just, you just couldn't get to 100% compliance. And so I think the threshold there is just something that startups and game developers have to consider. What's the level of risk that you're willing to take versus how much adoption you want to drive, right? And there are, I think, a bunch of things that are probably like mitigations that are low-hanging fruit that everyone should probably consider. You should probably just get good legal counsel and get good advice. And but in general, I'd say it's like a spectrum. It's like, it's not really like a, hey, go get a license or whatever, or just like, or go be like very egregious. Those are obviously the ends of the spectrum, and there's somewhere in between. And I think it's a very hard one, but I'd say for most early stage game developers, startups, app builders, it is very much just a trade-off in this environment where there isn't 100% clarity.
I mean, we've even told people, listen, you have a really cool project, go do it everywhere but the US, go raise some money, get it started, get it launched, get traction, and then we can help you with the US piece. And they're not mutually exclusive. They don't have to happen at the same time. So there is ways to kind of do it. I think the end of the day, that what the SEC really cares about is like, are you offering and or marketing or soliciting US retail investors? And obviously when there's tokens involved, they get a little bit crazy. So you just want to make sure that you're, managing your risk and doing what's proper for the protocol and your project, but there's always constraints. And, just like you were mentioning, it's not a very clear-cut case. So that's down to the founders and their partners and their investors to kind of steer them in the right direction, and counsel.
Yeah.
Obviously.
I also think, just also as a general principle, like be a good actor in the space.
Yeah, for sure.
Don't do it
for sure.
It's like,
the minute you start pushing buttons and tweeting at the SEC or tweeting at regulators, it's like, come on.
Yeah.
Do you need to be doing that? And when has that ended well for anyone, as we've seen in recent outcomes?
Yeah. No, I think you want to be like part of the conversation. Like that's important. I think
because again, I mean, regulators. They're not bad people. At the end of the day, they're trying to protect retail users, retail investors. So of course, it's not the kind of thing that if you screw up and you accidentally issue something, you can talk to them and be like, okay, I didn't realize this was this. How do I make this right? How do I structure it in a way that can go back and actually help me so that I can continue working and building my business without totally getting kicked out or fined or thrown in jail or anything like this. It's when there's malice or content that you're going out and you're knowingly going after US retail people, even though that you're not licensed or going down the right route. Or, again, trying to do rug pulls and things like this. But, even if it's not that aggressive, it's okay. If you know that there's a way to mitigate your risk by avoiding the US, then do that, until there's a bit more clear picture, until you can work out, what it's going to look like to enter, those specific markets. Yeah. So it's, as a founder, it's just about being smart. The writing's on the wall. It's not like, regulators don't know what's happening. They can open Twitter, they can, look on websites, they can see advertisements. So it's just about, doing what's best in terms of growing your business, what's best for the community, and so that you can actually build something sustainable and, lasting.
Right. And considering we are I'm sorry, just one more thing. Considering we are on the topic of just general costs, well, Joselle had from the audience had a question, which was, is there a minimum size company you'd work with to help with compliance? So I think it's a bit relevant just because we're talking about these kind of trade-offs of, do I need to be compliant or like, should I spend this money? Just for everyone's reference, some of the things that we would require is that if you're going to be launching something with us, you have at least set up a US-based company. There needs to be a commitment to do an audit. It can be a very simple audit. And generally speaking, you issue through some sort of SPV. So the company itself oftentimes is pretty basic and very little financials there. There's a little bit of setup cost, but ideally what we want to do is abstract as much cost away from you as possible because of our back end work that we've already done, so that you're not making this really tough decision between, hey, do I have to do it the right way or am I spending too much money? So hopefully that helped answer that for both Joselle and anyone else who might be interested. Now I'll shut up.
No, John, thank you for answering that question, because that kind of segues into my next question about cost. You described this, the cost of using SOMA's Finance's services, but I'm wondering, what are the costs to the broader industry with this lack of regulation, of this hesitancy of founders to build and fear that they might step on US regulators' toes and just completely cut out US markets in order to build their product? Like, what are the broader costs of this?
I mean,
I'd say from a user standpoint, maybe taking just the opposite before diving into the founders. From a user standpoint, I know that in the industry with pseudonymous names and things like this, the cost of doing KYC is nothing. For someone to actually access platforms and access these different ecosystems that are compliant, that are in the US, things like SIPC insured and things like that are running compliance to make sure you're not rugged. It's that's free. You signing up to anything going through a KYC process is totally free as a retail person. It's like there's no downside to that if you're working with licensed and regulated entities. Now, in terms of the kind of the other side of it, as founders, there's, I mean, a couple pieces to that, I would say. I mean, of course, you can be a founder and you can throw, hundreds of thousands or millions of dollars at lawyers and try to figure it out and still not come to a conclusion that, I wouldn't say is the smartest idea. Even though that's, most people's initial inclination is to, just kind of lawyer up and try to tell them what they should do. But having said that, it's also just, I mean, it's based off of what their roadmap, it's based off of what they're building. If you're able to do a use case in this test case and start in a more regulation friendly area, and then grow into, bigger spaces, grow into a US type, or grow into UK or Singapore, or things like this, then, why not do that? And why not do a staged approach? I mean, again, people always launch with a beta. You have a beta, and then you do some tests, and then you grow into actually going, either mainnet or into an alpha. That, why not do that? Why not do that, not just with the tech side, but why not do that on the compliance side? So in terms of, like, yes, you might from day one not be hitting the entire, addressable market, but realistically, no company can go 0 to 10,000 and capture every single person all at once. You still need to scale into that. So I think it's, the cutoff with it is, yes, you can mismanage your money and go down wrong avenues, but I'd say that it's not like you're either compliant or you're not. You can be compliant in areas and then grow into a truly global compliant entity, but it takes time.
Yeah, I'll share a couple of thoughts just from, I guess, the perspective of, like, just startups in general. But I think the biggest trade-off actually is definitely money is one thing, but it's time. I think it's like execution speed probably will just slow down. That's just the reality, I think, of going through compliant processes. A classic example of this, I think, is in the Coinbase in the early days. I think one of their first 10 employees was like someone on the regulatory side, and that fundamentally changes, I think, the DNA of the company and what the company ultimately ends up becoming. And now I think, I don't know what the number is, but when I was at Coinbase, I think it was something like, I don't know, 20% or something, 10%, 20% of the staff were regulatory compliance, that sort of set of functions. So that's, like, I think a really like long-term implication of going down this path, right? The short-term implication, I think, is just execution speed. And again, that goes back to the trade-off thing where, when you're trying to find product market fit as like an early stage game or early stage, whatever startup, you're just battling to try and survive, get your first customers, get your first revenue, all that kind of stuff. And if your go-to-market delays, whatever, 3 months, 6 months, 1 year, that can be meaningful. I'm speaking obviously in very general terms here, but just want to offer that perspective too. Like, it isn't always just the dollars. I think execution speed often is the thing that kills companies.
For sure. I mean, I think because there haven't been that many viable options in the past with respect to kind of US market access and clear regulation, that has been the issue. You either like, hey, we're just going to start launching stuff, and then hopefully we get big enough that if they come knocking, and by they I mean the regulators, then they have enough money to be able to pay a sort of fine and get a slap on the wrist and kind of move on with their business. And that's happened time and time again, right? It's a proven model across tech, where the tech guys innovate and then eventually the regulators catch up. But you just don't want to get caught on the wrong side of that. And I think if you can come up with an opportunity and an option that doesn't necessarily compromise your speed, but allows you to also still give that access and the ability to kind of rest your head at night and sleep, and you don't have to worry about getting subpoenaed at mainnet or consensus or whatever, then that's, I think most people would want that, right? But I just don't know if there hasn't been to date a very clear opportunity for that, or option for that, I should say. Also, there's some very interesting questions going on in the in the chat. Getting distracted.
Yeah, I really want to dive into these interesting questions, but I just have one more that I want to ask the group. So, we've discussed that, no company is going to be 100% compliant out of the gate. And, we just have to move forward managing the risks that we can, i.e. with general counsel, being good faith actors, etc. So now my question to everyone is, what does Web3 stand to gain through in-game assets by incorporating this technology into how we play and how we earn?
Yeah, I can kick this one off. I think there's a bunch of stuff. Like, number one is that if you look at what makes games generally, enticing, attractive, a fun industry, it's because it's inherently very social, right? And the games are fun, and people want to connect, and just different way for people to really be part of kind of some community. And these are things that are also inherently very true with sort of how Web3 has come about, right? Both sort of the early builders and very true today with NFT projects. So, and a lot of these behaviors, I think are really interesting, because what I think NFTs really enable is true ownership, right? And that's the thing I think that a lot of gamers will hopefully resonate with. It's the fact that if I'm already participating in in-game economies in the games that I play, whether it's like Valorant or like whatever game it is that you play, a lot of those things you can actually truly own in the future if you're buying items that are on chain. So that's number one. Number two is that a lot of people are excited about the vision or the world where there's interoperability between all these different games and all these different items across different chains and all. I think we're still pretty far away from that world, frankly. It's like pretty hard technically to make that work. But I do think that we're not too far away from, first of all, one or two really, fun mass market games, and then two, sort of like closed ecosystems of multiple games. Maybe it's within the one studio that will enable that kind of functionality, right? So that's the kind of stuff that I think is exciting, and why I think, or like why I hope Web3 games will eventually just take off. But it is still nascent, so we'll sort of see how this plays out.
Yeah, so I guess
I think.
No, go ahead, Will.
You go
ahead.
Right. Well, thank you. So I think first addressing, one of the comments that you said, MK. So it is actually possible now to be compliant out the gate. Through what we're doing in terms of on the issuance side, it is possible for projects, whether it's a game, whether it's an NFT project, DeFi project, focusing on tokens, whatever, to actually launch and be compliant out the gate through these different regulatory exemptions that we're able to offer through SOMA, like a Reg CF, which is US crowdfunding license, or DSA+, these kind of different things. So that is actually something that's greatly changing, and we're really helping to spearhead and work with projects. Because again, even if you look at a big like listed company or big sports, or like big gaming company, their biggest thing is from their risk department, their legal department, their compliance department, that they're not going to risk their billions dollars company by doing something that's going to get them in trouble, or potentially shut down, or something happening. So that definitely is a possibility. Now, in terms of kind of some of the what's really exciting, and in terms of what you said are kind of the cross game assets. So I think as of right now, within the kind of the gaming ecosystem, Play to Earn games showed that you can make money from gaming. The different esports leagues now showed that there's crazy amounts of capital flowing, and these different teams are making millions and millions of dollars through these different tournaments. That there's real money to be had, and it's really a becoming a financial ecosystem based around these games. And now I think kind of the emergence and the combination of kind of where DeFi comes into play with these, as well as regulation. So being able to have an exchange or marketplace where you can have one of the skins, one of the players, one of the weapons from one game, and you can trade it with another. But then tying in some of the compliance and regulated and securities aspects, what if you could take your in-game asset and trade it to Ethereum? What if you could trade it to a tokenized share of Tesla or Apple? Or what if you could offboard it into USD into your bank account? So I think, one of the really cool things is, eventually, and again, it is definitely is still farther away, but there's more clearly defined paths in terms of what this will look like, to be able to have these ecosystems where you can be playing one game, you can switch it and trade it for, an asset in another game, or you could potentially trade it into, public equity or, a different crypto. So really having it become, part of this global, decentralized, borderless marketplace and ecosystem that people can trade amongst. They can put it up as collateral, and really making it, merging DeFi into GameFi within these games. And I think that's really one of the coolest things that'll end up happening across this. And kind of as you start having these different pieces considered to be securities, and kind of what we'll see emerge. So that's going to be kind of one of the big things that we'll see across, either the smaller play to earn up until, some of the bigger game studios that are putting out, ones that are absolutely blockbusters in the space.
And I guess my only final comment would be, so Vance Spencer from Framework Ventures, he had a interesting talk at Permissionless in Palm Beach a few weeks back, and he was saying that initially the use case for DeFi was to bring on all these new people, but in fact it never really happened, right? It's honestly DeFi. We're in both the DeFi and kind of the NFT space, but mainly the DeFi space, to be honest. It's a pretty complex world, right? And for the average Joe, the average retail person, it's very, very tricky, and it's not the easiest thing to understand and wrap your head around. And there's still a lot of friction points. I think honestly getting into NFTs and games is much easier. And so what he was basically saying, and I actually completely agree, and it's actually kind of part of the way that we've envisioned our strategy between both Mantra and Soma, is that actually the game itself is the kind of the onboarding mechanism for bringing all these new retail users into the space. And I think, as you see more, kind of NFTs and in-game assets issued and done in a compliant and proper way down the line, you're going to be able to onboard tons and tons of new users. They're going to onboard through games much quicker than they're going to onboard through DeFi. But the fact that you can use DeFi to then financialize and create this new infrastructure for these kind of new economies within these games. But again, ideally with the Soma, for example, we can do it in a way that doesn't get these guys in trouble, and you can have the infrastructure behind it that supports the ability to issue assets, create new assets, trade them, and do this all in this kind of like Web3 way. Like that's why I think Web3 gaming is going to be huge, and why it's a really big part of DeFi and a big part of our strategy, because that's the onboarding part, and then that gives the use case to DeFi, right? Because you have all these new assets, you have all these new users, you have all these new issuers who want to fundraise, that want to, create new projects and all different types of things. So that's what gets me excited. And I think that's going to be a big, tie-in between both DeFi and NFT Web3 gaming space. I know we had like this whole GameFi thing, but I almost think that it's better to separate it a little bit and just have the games, and then you have the DeFi, and then you disconnect.
Right. Yeah, that's a very interesting point. Any more discussions about DeFi and GameFi, how they intersect and are unrelated? Because I want to dive into the chat real quick. And thank you for whoever posted the story from the block. Yeah, we did cover the airdropping via NFT, which I thought was a very interesting story. But yeah, I want to present Michael Kelly's question about how can GameFi projects ever be truly decentralized when they're constructed with centralization as the driving concern. Any thoughts on this?
I think that's a super fair question. Yeah, this goes to the ethos and the decision of the founders, right, who are building these things. Like, where do they land on that spectrum? Because decentralization is definitely a spectrum, and for some people, they come into this space because they have a philosophical or ideological view that things should be open, transparent, owned by the community, all that kind of stuff. And I think if you go down this approach, yeah, I think it is fundamentally in direct tension with that very ideological approach. So I do think that, like, generally there's not a ton of overlap there. I think when we talk about, like, yeah, if you want to take some approach that does address like some regulatory risk, I think it basically says you can never be fully decentralized. And I think that's okay. That's just a decision that founders and teams have to make. And I don't know if there's a right answer. It's just like, as a founder or a team, you make the trade-offs and decide what's best for the company. Yeah.
I agree.
Excellent. Yeah, I want to move on to Vincent's question about, for everyone here, what is the most important thing a new game with play-to-earn capabilities needs to think about from a regulatory perspective?
I would say, like, how much money are you raising? Who are you raising it from? How are you going to sell this to them? Are you going to do KYC on the offering? Are you selling to US retail investors? Are you from the US? Are you anonymous? Are you American? Like, all those things are pretty relevant. And if you tick yes to any of them, then you should be a little careful, particularly the American stuff. So, I mean, I think I'm American, Will's American. We have to be super careful about what we do. We're also obviously doxxed. I don't have a avatar or anything on my face right now. But, you know, you do need to be careful about how you do that. And I think if you're going to do a play-to-earn game, particularly looking at the US market, that's where there's the regulatory risk, in my opinion. And that's where you have to make those trade-offs. If you're just doing it for the, you know, everywhere else, I think there's less of a, hey, this is going to be an issue for you. But in the US, there's the tide is coming.
Mm-hmm.
Yeah, and that's a big thing. I mean, just listing out, you know, what do you envision your NFT or your token or your, you know, whatever in-game asset you're creating? What do you intend it to do? You know, ideally, what sort of functionality and what is it doing? You know, once you're kind of in full, you know, full sprint mode. Those are kind of the big questions that, you know, then you come and talk with, you know, someone like us, and we can kind of look through and go, okay, this, you know, it showing up, you know, throwing off dividends or giving airdrops, you know, that's where it ticks the box of being a security, and that's where you need to be careful. So it's also looking at, you know, what you're going to actually end up doing. Again, if it's a play to earn, then that's, you know, somewhat obviously crossing the lines of a security, at least within the US. But it's, you know, again, those are kind of the things that you can kind of, you know, at least even internally with yourself, through things like how we test and just clear thinking, figure out exactly, you know, what would make sense and what's going to cross the line of potentially getting you in trouble.
Right. Now, Darren has a question about what are you guys seeing with DAOs that are building GameFi applications, and how do those tokens relate to in terms of scrutiny from the US regulator?
I mean, good question. I don't think a DAO is necessarily the legal coverage that you would want to potentially, you know, obfuscate yourself from any legal recourse in the United States when it comes to GameFi. It's one way that you can kind of maintain, I guess, kind of token treasuries and kind of in-game management and things like this. But I don't think from a regulatory perspective, it really protects you at all. I'm not sure if it necessarily makes you a target either. I mean, there was even that recent case, I think, where I think it was BZX, where there was a hack of the DAO, right? And essentially, people from the DAO are suing the DAO, but then like, I don't know if I'm actually suing myself because I'm part of the DAO too. So there's also these kind of like interesting conundrums of like, what does this even mean from a legal perspective? And who's going to be liable? How do you actually prosecute them? Like, those are questions that are still going to be just played out in court, to be honest. So I don't necessarily know how that one's going to work, but that's going to be an interesting case to follow. Like, did the guy just sue himself at no fault of his own for losing, you know, his tokens within a hack? I don't know. I'm not a lawyer either, so I'm not going to suggest anything.
I mean, DAOs are definitely an interesting one because, I mean, just based off governance, I mean, you know, proposing and voting isn't, you know, something that's necessarily fiscal or crossing the line into a security, but then it's just everything else that what those tokens do surrounding, you know, those specific DAOs. And I know,
well, if you're managing money, there's other things that could potentially.
Yeah, exactly. I mean, I know there's there's a lot of, people think that there's in the US negative connotations with DAOs. It's just, it's something new. So with anything new, there's just a little bit more, teaching or understanding that needs to go into it for people to become comfortable. But yeah, it's definitely not something that's gonna, immediately go, okay, that's a DAO or that's a foundation. They're obviously doing something wrong. That's definitely not the case. But it is, yeah, there's a lot of new ways that DAOs are being structured and operating. So there's no cookie cutter for it. It's all for sure, case by case in terms of what they're doing.
Right. Yeah. So Heather brings up an interesting point about the gaps that we're currently seeing in GameFi in terms of like the types of games that were currently existing or the demographics that we're seeing. So what are the pain points that we're seeing now? What is the lack, and what needs to be addressed?
And this is in terms of the types of games?
I guess in just anything in regards to this field, in terms of, I guess, more broadly, NFTs, GameFi, types of games that exist, etc. What are we seeing?
So I think, number one, there needs to be a lot more infrastructure built to make it easier for people to build. Like, for example, as a developer interacting with on-chain stuff, if you've never seen it before, it's just different. It's just weird, right? You need to get used to that. And so that's number one. Number two, I think, is it takes a long time to build good games. I think in traditional gaming, 90% of games actually just fail. Like, they don't make it because it's competitive. It's hard to build a really fun game with the amazing game loop and game economy, and you throw like experimental tokens on top of that. It's like, dude, no one really knows like how easy or hard this is going to be. But yeah, I do think that we are starting to see some interesting ones. Like, one of them that I'm pretty excited about is there's a game called Biomes that is effectively like a Minecraft but built on Solana. So it's kind of like UGC. Users can create all kinds of different things in the game, and you can mint those items, right? So I think that's like really interesting and sort of very, very approachable, right? It's not like just a shoot 'em up. I think, as Heather was saying, it's not like some fancy, like earn mechanism. It's just, for the same reasons that people like to create things and do things in Minecraft. It's kind of a similar, very, very similar kind of concept. And I think we'll see more of these over time. I think the third thing I'll say is that today there's, as a developer, what you're looking for is, the largest number of players that you want to reach. And I think true gamers still are not like totally across by any means, like across that sort of crypto spectrum yet. There's still a little bit of apprehension around it. So that will, again, just take some time, as this is sort of a new business model, and there's lack of a truly, truly fun mass market game. But I think, yeah, I'm really excited because there's been a lot of capital inflow. There's a lot of teams, including Magic Eden, that's building a lot of the infrastructure, right? That's going to make it easier for games to come in and interact with on-chain items. So like, we have an SDK, for example, that allows effectively any game to create an in-game marketplace, right? So if they want to launch NFTs and make that a part of their game economy, they can utilize Magic Eden's protocol and infrastructure under the hood, right? So they don't need to touch any of the complicated stuff that's on-chain. So it's tooling like this that I think will just make it easier for developers to come and just try things out.
I think she was also specifically referencing women and what are the gaps for them. Honestly, I don't know. I'm not sure I'm the right person to answer that particular question. Actually, MK, maybe you can answer.
Right. I feel like that's a broad question. But yeah, I guess it's just applying what games more women are interested in now,
Right.
and then sort of like, how do we apply that with crypto, with play to earn gaming capabilities? But yeah, I imagine this is not. We could have a whole nother panel about this specific question.
Maybe with more women on it.
Right, exactly. But
Well, I guess a big part of that would kind of go into Zhouxun's part about just infrastructure, having the right things to build with. I think that at least, again, in the traditional gaming world, and this just, I mean, not on the women's side, just in general, it's hard to build a game. Proper games take years to make and actually develop. But nowadays, again, with the emergence of different platforms, different blockchains, different SDKs that people are building, it's actually allowing people that might not know how to build a full interactive multi-person game, but are able to build something that's actually more interesting to themselves as players, or more interesting to them and their friends. And I think that'll actually help to diversify the game industry just in general, because it's not the big titles that are being released by the big studios. It's these communities and these people that are launching what they want to play, which is definitely a really cool kind of nuance to the space that we'll start to see that they didn't necessarily have a voice before, because it's again just the big companies that are developing what they think is going to sell the most.
Mm-hmm. Yeah, Heather, thank you again for that question and that comment. Yeah, like I said, tons of opportunity here. But now I want to move towards Emiliano's question. Will regulators eventually look into the in-game token economics and inflation regulation, especially in regard to the SLP hyperinflation that we saw with Axie Infinity?
I would say yes and no. Currently, there's so much out there for the regulators to look at that it's honestly extremely hard for them to kind of assess what they even look at. Right? There's so many tokens, there's so many NFTs, there's so many projects, there's so many exchanges out there that looking into the specific tokenomics just from a pure resource perspective, like they don't have, right? So being able to like really dive deep into this, maybe they will down the line when like, hey, there's an issue here, and now we're looking at it and we're we have some potential red flags that we're looking into. But I don't think on a just general basis they're like, hey, let's look at all the tokenomics of these projects, because until it goes bad, like in a lot of cases you don't know if it's bad or not, right? It can just like one day there's a death spiral and the whole thing goes to zero. Maybe people were calling it a Ponzi, and maybe it was, but for the time being it was working, right? So I think it's difficult to say that like there's going to be regulators explicitly looking, and there's for sure not like a tokenomics department at the SEC. So I think maybe in the future this is going to be something they'll consider more, but I just don't think this is something within their wheelbase right now that they can really handle. Nor did they want to be honest.
Right. Yeah. I definitely agree in what you said. Like, there's so much happening in this space. Like, I don't see how this SEC or regulators in general can keep track of it all. So, yeah.
Anthony said the U.S. regulators can't handle USD inflation.
Right. Yeah. Oh man, everyone, thank you so much everyone in the comments. Thank you so much for your questions. I really think that we could keep talking about this topic of NFTs and in-game currencies and regulation for hours and hours. But in the last few minutes that we had, I just want to take it back in terms of this broader conversation, the last hour that we spent with each other, with the panelists. Is there anything that we didn't discuss? Any closing comments that you want to bring up before we leave?
Is this for us or the
everyone?
Viewers. I wasn't sure if I should type in the comments. I guess I'll kick it off. So a lot of really good topics and conversations and kind of viewpoints and what we're seeing happening in the future. It's still very early on. Regulation is just now coming around and starting to define and make it clear and put guidelines in terms of how to operate within their jurisdictions and how to be compliant, how to keep themselves safe, their users safe, all of this. I think the biggest thing just leaving it is if you're looking at the US, if you're doing something that, you know, you want to utilize US retail people and be able to have them access, whether it's a game, whether it's a different token ecosystem, whatever, reach out to us. We've done this before. You know, we deal with the regulators in the US, you know, quite frequently. And, you know, we kind of work hand in hand with them because, you know, ultimately they want to see this succeed as well. They want to see, you know, people able to, you know, access the US market and build in the US and, you know, have really interesting products and services for US retail as well as, you know, US companies and, you know, everything kind of underneath their scope. So, you know, reach out. There's, you know, it's better to call a spade and issue something as a security instead of, you know, trying to jump through hoops and make things a utility, just because, you know, in the US utility tokens and things like that don't really exist. So, you know, if you're looking at issuing anything, reach out to you know, myself, reach out to John, reach out to, you know, the team at SOMA Finance, and we'll help to at least, you know, give you a good idea in terms of like what you're doing. Does it even need to be regulated? You know, what it would look like, and, you know, help to do it right. So, you know, you as a founder, you as a builder can focus on, you know, what you do best, and can, you know, leave the legal, the compliance, and, you know, that question mark up to us.
Cool. Yeah.
Leave a break between the two Soma guys.
The sandwich.
No, I was going to say thanks for having me. It's a super fun chat. And yeah, excited for what's to come.
Yeah, and then just wrap it up. Really appreciate all the questions. You know, I think some people have already gotten in touch over the chat, so feel free to reach out. Emails john@soma.finance. Telegram is @jpmullin, Mullin. Need to change that earlier. And really appreciate the time. Great questions. Really enjoyed the chat, and looking forward to do this more.
Excellent. Everyone, thank you so much again for your time. To the 3 excellent panelists here, for the amazing engagement in the chat. My name is MK Manoylov. I'm a reporter for The Block. Keep posting the Block articles in the various chats that you find yourself in. And yeah, thank you all so much again for your engagement. This has been an excellent conversation. And yeah, now you know where all to find us. So awesome. Well, thank everyone once more. And yeah, enjoy your day. See ya.
Thanks, everyone.
All right.